Hello, good morning. Over here in New York, it's morning. Good afternoon. If you're from Europe, Africa, good evening. If you're from the Far East, Australia included, New Zealand. I don't know if I have any subscribers from New Zealand, but you're welcome to this live stream. Hi, Kende from Nigeria. And so what I'm going to do, I'm just going to get started. Now, the topic for today is how you can use moving averages to increase your trading profits. And a lot of questions, Bilal, but I'm going to take your questions a little afterwards. One thing you have to know as a new trader, and I do have quite a few new traders subscribed to my channel, is everybody seems to feel they can jump into trading and just begin to make money. It doesn't work that way. I like to say anybody can make money like one time, but it's only the seasoned trader, it's only the well-educated trader, it's only the trader who knows his tools, his analysis tools, his indicators, his resistance levels, who can make consistent profit. There's no point making $100 today and then losing $125 tomorrow. And that is what will be the case if there's that haste to make money. So what this channel is about teaching you the tools that you need to ensure that you can become consistent in your trading. Consistent as far as making profits. Okay, so let's get started. Now, I'm going to take you to let me see, my Binance. So this is my Binance account. And if you click on markets, that's where I am right now. We see what's going on in the markets right now. Now, it's interesting. I mean, you get maybe the same effect as if you're using CoinMarketCap, but what you want to do, for those of you who are so interested in what coin is pumping and how could I have gone in on the action before it moved upwards, well, this is what you want to do. You want to do your homework before. For those of you who don't know that a certain coin pumped, it's because you're not part of a community. It's because you haven't analyzed your charts. It's because you don't have alerts set. You don't have a watch list. I mean, you have nothing, but you want to know when you want to know before a coin was going to pump. Well, you got to make sure all your tools are in place. Now, I would believe most of you may have Binance. I don't know. There's so many other cryptocurrency platforms out there, but Binance is one of the main ones I use. And if you go to that markets page, and if you click on 24-hour change, so let's click on 24-hour change, and it sorts the coins in terms of how much the change has been over the past 24 hours. If you click it again, and it sorts it from top to bottom as far as percentage changes, and we can see that this coin, Storage/USDT, in the last 24 hours has moved 36%. So this is the kind of information you want to get in on before the move. But this is one of the things you could do to ensure that you're in the loop. Definitely, you could also you could subscribe to a trading signal company, a trading signal website. There is one that I tend to use when I do use it, and it's okay. Trading signals are okay, but I don't believe there's any trading signal website or platform out there that is correct 100% of the time. Nobody is correct 100% of the time. So that's why you have to make sure that you can take their signals, if that's what your preferred way of getting in on what coins are moving. Take their signals, analyze the signals, look at the charts, and see if it's something that's worth investing in. So this is one way you would do it. So storage has pumped overnight over the past 24 hours. So there it is, 24-hour change. Okay, we were not in on this action, but this is what I would suggest that you do to ensure that you can get in on the action. When next it pumps. So this is the chart. It has changed. There has been this great, look at this, just look at the size of this candlestick. And this is a daily chart. You can see it's a daily chart over here. And look at this. Now, if you wanted to get in on this action, I'm going to change this chart. Let me create a full screen. And no, let's leave it like this for now. And do this. Okay. This is where your levels come in. Last week, I went over how to use support and resistance levels to analyze your trade signals. And so if you're not familiar with support and resistance levels, you're going to have to educate yourselves, and you're going to have to watch those videos. I have a bunch of them on my channel. There are a bunch of them out there on YouTube. Watch the channels, because we're going to come out of this a little. Now, I hope to move into moving averages, but just the fact that this is a question everybody's asking, what's the next coin that's going to pump? Is making me change the topic for, I don't know whether we'll change the whole topic for today, but if you zoom out there, so this is the daily chart and we've zoomed out, and you can see the price action of this coin that pumped in the last 24 hours. Look at the price action over, when was this? July of last year. So just look at it, how it's gone up, how it's gone down, and you want to look at the last time it pumped. Over here is the more recent time it pumped, or we could actually say yesterday, right? 24 hours, 26th of March. But what about the last time it pumped? And I don't really want to count 2 days ago, because that's all part of the pump over the past week. Here's over here, let's see, this area here, right here. So I'm going to enlarge this chart. Let's try and enlarge it. Okay, it's a little better. Over here, I'm going to draw some levels, and I will tend to use this horizontal line here, and I'm going to draw a level down here. Why do I draw this level down here? I draw it because, okay, so I've drawn this white level because to the left of this vertical line, price action had not gone beyond the white line. So that was a strong resistance. So ever since the inception of this coin, price action had not gone above 0.486 of a tether. And so what would have happened is, at this point now we can see there's been a pump. So there's this, from this particular candlestick, we can see it could have been a pump, it could have been anything, but price action finally broke above. It broke above this level. Now it broke above this level and it moved over 1, 2, 3, 4, 5, 6, 7, 8, 9. There it is. It moved right here. So we're going to draw another level. We're going to draw another level here. Okay. So you can see now it's upped its game. It broke above resistance below, and now a new resistance has been formed, and this new resistance is the yellow line. Okay, so again, price action has not broken above. Guys, this is the point where you want to set your alerts. You want to set your alert because you've missed out on this pump. Okay, it's gone. You missed out. You heard the next day that it pumped from the white level to the yellow level. You missed it completely. That's okay. but you set your alert at this point. You're going to right click. So I'm using TradingView, as most of you can see up there from the URL. And we're going to right click on that yellow line, add alert. You know, set your alert the way you like it to be set. You know, let it email you, let it notify you. You know, you want to notified once every bar, whatever that is. Set it and leave it and be gone. Now this, okay, I have the basic TradingView. I don't pay for I don't pay a subscription, and so there's only one alert. It only allows one alert. Okay, so that means I already have an alert there. If it's something that you're interested in, upgrade your TradingView, and I believe you have up to 40 alerts you can set. So you would create that alert, and you know what would have happened? You would have gotten alerted. You would have gotten alerted when price action moved above. Now let's look at the day it moved above. There it is, 17th of March, guys. This is it. 17th, is it 17th? Yeah, right there. 17th of March, you would have been alerted that price action for storage has moved above the previous resistance. So you pick up some storage. Pick up some storage. The fact that price action is moving above tells you there's something going down. The second thing you want to look at, of course, before I leave this screen, if you had picked up storage here, you would have held your coin 1, 2, 3, 4, 5. Day 6, guys, you would have been in on the action. Look at this massive move. You would have been in on the action. Okay, the second thing you would do, looking at your coin market cap or on your Binance market page, you want to look at volume, guys, over here. See this volume? You want to search on volume. You click it once and it gives you volume in ascending order. We want it in descending order. Okay, so of course we expect there to be greatest volume with the BTC, you know, trading Bitcoin. So we have 11, I don't know, is that a billion or whatever that is? 11 billion, you know, in people interested in the BTC USDT coin. So trades, the number of trades. Look at your storage is right there, number 3. So that this shows you that there are a lot of eyes on this coin pair. Volume is what increases price. I'll rephrase that. An increase in volume, a sudden increase in volume, is what pushes price up. So volume today compared to volume yesterday. So if we were to able to look at the volume of this coin pair, say a week ago, it wouldn't have been 4 million. It wouldn't have been 4 million. It would have been, I don't know, whatever that was, 1 million. These are the kind of stats that you would check, the kind of metrics that you want to be aware of. And basically that is how you would have been in on this major storage move. Storage USD, the storage USD move, you would have been in on it. Of course, I don't want to trade it, so I'm not going here. So if I want to always be in on the move, whenever a coin pumps is a good time to put that pair, that coin, that stock, that forex coin, currency pair. You want to put it on your watch list. And so trading without a watch list, I don't know how anybody does that, but if you're trading without a watch list, make sure that you watch my videos on how to create a watch list, watch any videos on how to create a watch list. Always trade with a watch list. You need it. I was going to talk about moving averages today, but maybe I'll take a few questions before I come back to moving averages. Okay. Hi, Kende, watching from Nigeria or your state. It's good to have you. Bilal, where are you from? Where are you streaming in from, Bilal? Bilal Khan. Let's know. Let's be part of this big global community. In Binance future trading, which coin is pumped? Who can find candle? Who is jumping? Okay, so you're going to have to be a little clearer so I can understand. Just ask one question. One question at a time will help me understand you a little better. But I think you're talking about basically finding what coin is pumping, and I've just gone over it. If you've missed the last 18 minutes of this live stream, I will be creating a video of it, and I will be uploading it to YouTube, so you can always catch up on what you missed. Okay, let's take a couple more questions before I move into moving averages. How important moving averages are to your trading? When we trade, we traders, we want, let's know what moving averages you use. Let's know whether you use the simple EMA, the simple the SMA, the simple moving average, or the exponential moving average. Let me know what you use. If you've never heard of moving averages, also let's know that you've never heard of moving averages. I'm always curious to know. Hi Hassan from Nigeria. Nigeria is my homeland, as you most know. Those of you who are Nigerians can tell, obviously, from my name. Similolu. If you haven't subscribed to my channel, by the way, it will be a good idea, I think, if you're new to trading, because it took me 2 years being mentored to learn everything that I try to give you in these short live stream sessions and in my videos. And so, of course, you're not going to get it all in one video or one live streaming session. So that's why I strongly recommend that you subscribe. Give this video a like. Okay, guys, this is the part where you help me. Your likes actually help YouTube know that you enjoy this content and you would appreciate more of it, because the more I'm ranked on YouTube, the easier it is for me to create content that is in line with what you like, if that makes sense. There's so much I could, so many different topics I could be talking on, but in order for me to know that I'm on point, I need to see your likes. You like the video, subscribe, of course, share with your friends, family, people, anybody you know who's struggling with trading. Yeah, share my channel. That would be much appreciated, but I will appreciate your likes as well. Okay, so moving averages, I'm still waiting to see. Say no if you do not use moving averages in your charting analysis. Write yes and let me know what type of moving average you use, if you do use moving averages. So moving averages are just that. They just have the average of price over a period of time. And the average of price over the last so many days or so many hours or so many minutes informs us of what price wants to do over the next period of time. So it's a bit like history. There's some terrible things that occurred in history: slavery, the Holocaust, genocide. And we teach history to our children so that when they become the leaders of tomorrow, they can learn from history that, you know, the outcome of genocide, the outcome of slavery, and the outcome of the Holocaust and terrible crimes against humanity like that, you know, and the way they ended up and how it impacted the world, obviously negatively. And the hope is that our children, who are the leaders of tomorrow, it will inform their decisions and as politicians and leaders of nations. And that's what we're doing with our moving averages. We're looking at the average price from previous periods, and we're wanting it to inform us of what's going to happen over the next few periods. Nobody is in the future, guys. Only God is in the future. I don't know what's going to happen tomorrow. I don't know whether Bitcoin is going to go to 75,000 and up tomorrow. That would be nice. But we hope, and then we study the charts. Moving averages, they help you. Okay, I still don't see anything. Okay, so let me move back to my chart. So let's go back to this storage chart. Storage USA. No, I'm not going to do this. I'm going to go back to... Let's go back to Bitcoin. Bitcoin is all the rage. So let's do Bitcoin and USD. Okay, you can see I have my levels here, probably from last week's lesson. So last week's live stream. So let me get rid of this. Kenneth is joining for the first time from Essex. I lived in Essex as a child, amongst other places in England. But the foster mother who cared for me and my sister lived in Essex. My parents studied as young 20-year-olds in England back in the day, and it was common then to put your children with foster parents temporarily. Okay, so Essex, yes, I love Essex. So moving averages. Now, okay, Kenneth says, I am a bit confused of the various types of moving averages. Okay, that's fair enough. So I'm going to work on, there's several moving averages. All the moving averages have their role. You have the simple moving average and you have the exponential moving average. All I want you to do, Kenneth, is I just want you to Google those two and look at their definitions. The simple moving average is simply that. Just take the average of price over the X number of time periods and do the average. The exponential moving average actually includes an element of volume. So, and it better informs us that when we see the moving average lines moving, the EMA incorporates the fact that there is increased volume in that calculation. So I tend to use the EMA. Okay, so we're going to go to, let me remember how we do this. So we're going to go to indicators and we're going to type in moving averages. Okay, so when we type in moving averages, it comes up with the, I don't even see the SMA here. Okay, so anyway, moving average exponential. So I'm going to click on this twice and it's going to give me two moving averages. Okay, so Kenneth doesn't use moving averages. Okay, so it gives me two moving averages and I'm going to customize my moving averages right now. So I'm going to go into the first one under this gear sign. I'm going to go in. I'm going to change the color. Actually, I'll leave this color blue. I'm going to change the thickness because I want it to be clear on the charts. Oh, let's go back in there. And then I'm going to change the input. I'm going to change it from a I'm going to change it from a 9-day moving average, move down to a, we can make it, well, I tend to trade on the 3-day moving average, but I'll leave it as a 5-day moving average for now because I feel that's more popular and more common. So even as if you look at the chart behind the white box, you can see as you increase the number of days that it calculates the moving average on, you can see how it changes. So let's leave it on the 5 for now. And then let's take that second one and let's change that to a 10-day moving average. And let's move that color and make that clearly distinctive, make that yellow and increase the thickness. Okay, so right now my charts, I have two moving averages. The blue one is the 5-day EMA moving average and the yellow one is the 10-day moving average. So they individually map the average price over the past so many days. So when price action is trading above the moving averages, then that means price is higher than the average prices over the previous days. And when price is trading below the moving averages, then the current price is under the average prices for the previous days. That should inform your trading. If we look on this section right here, you can see price action is above the two moving averages, above. That informs us that, you know, price action is pretty bullish. Bullish meaning price is increasing. We like it when price increases over a time period. Okay. So now I have two moving averages on the screen. I'm going to increase this to a full chart. I like the full chart. Okay, we have two moving averages on the screen. To the left here, price action is constantly above. What it does is, for as long as price action is above your moving averages, it shows you the trend is upwards. It shows you the market is bullish. It shows you there is a greater chance that if you enter a trade, price will increase. That's what it does. But for everything that goes up, there's always a down. And what you don't want to do is, you don't want to, right where this intersection is, you don't want to enter a trade, say, at this green candle. And then the next day, it goes down with your money. So it's important to know what point at which to enter. We can't be guessing these things, because you may enter a trade down here and just get lucky. And over the next 2, 3, 4, 5 days, your money increases. But equally, if you try it out again some days later and you say, oh, well, it worked for me 6 days ago, and you do it here, well, look what happens. Red candle, red candle, red candle over the next 3 days. So it's not a strategy just to say price action is operating above the moving averages. Okay, it's a bullish market, let's get in. Yes, but you don't want to get in at the point at which there's going to be a pullback. How can we know when it's time to enter a trade? How can we know when it's time to exit a trade? Well, again, you need your watch list. You need to be keeping your eye on the trade. You need to have your alerts set. You need to be part of a trading community. Like, all these things work together to make a more holistic trading style. Okay, so let me see if I can help here. I'm going to show where, now the blue, the time interval of the blue moving average is 5 days, and the time interval for the yellow is over 10 days. Whenever your shorter time interval, whenever your shorter moving average crosses below the longer one, then you want to get out of the trade. So in this case, when the blue crosses down below at this point, I'm going to come out because I need some of my trading. Let me see if I can find it. Not here. I think it's here. Okay. To here. Okay. So that purple rectangular box is a general, there is a crossover. The blue crosses over from the bottom to the top. And then what happens? Price action now starts heading up. So what you want to do as an astute trader, you want to identify the points at which the smaller time interval crosses up and above the larger time interval. That's when you want to enter the trade. So you could have entered the trade. Let me try to enlarge this. It's kind of like a flatlining crossover. It's not an exact spot crossover. And let's say you've been keeping an eye on it. You don't see a crossover. And then this day, the 1st of February, it looks like they're connecting, the blue is crossing over. You could have entered the trade right on this day, 1st of February, a trade throughout that period, and obviously you would have made money on your investment. Okay, so that would be a point of entry. Now, I'm a day trader, so usually I will not, when I'm trading, I'm looking to make my profits like within the space of 1 day. Actually, the shorter the time frame in which I can make my profits, the better. So that could be 5 minutes, 10 minutes, 1 hour, 3 hours. But usually I want to daily. I would use the daily to just identify the fact that trade, the market both ways. Now, once we get over to this point, the blue moving average, which is the smaller moving average, has been above the larger one. But look at this point over here, it crosses down. Now, assuming you've been in the trade from the purple box, I mean, you've made some decent money and you set your stop losses, hopefully, as you were going along. But if you not out of the once you see this cross back down, the cross up is usually called a golden cross, and the cross down is called the death cross. So once you see this death cross here, you probably want to consider at that point getting out of the trade. Let me see if I can, right there. Okay. And that is what our moving averages are. As many videos as possible. I try sometimes to make live trading videos. I haven't done that in a while, recording exactly what I'm doing. I'll consider going back to that, but I did do that some years ago. Okay, so that is it. Let me see what else. Moving averages. So the golden cross is a point at which you could, once you see the cross over to the top of the smaller moving average, you want to consider entering your trade. Never, guys, my caveat is never ever, it's good practice to not enter a trade based on one indication. Let whatever it is be, your moving averages, your support and resistance, your volume, make sure you have a cocktail of different indicators that you look out for before you enter a trade. Same with before you exit a trade. Because one of the worst things is exiting a trade, and as soon as you exit, you see this huge pump. I mean, that happens to everybody. It's all part of the journey. So looking out for a golden cross is is one parameter that I use quite a bit. Dave Smith, tell me where you're streaming in from, Dave. In the chat box, where are you streaming in from? But Dave wants to know, what parameters do I prefer? There's no one parameter, and they're not so much parameters. We call them indicators, or indicators. I use a cocktail of them, and it varies from trade to trade. So my moving averages, I think my number one will be my support and resistance levels. And if you don't know, hi Dave Smith from UK. I hope you're getting as nice a weather as we are over here on the other side of the world. I do use, I think my support and resistance is, I can't trade without support and resistance. Or let me say it this way, whenever I do trade without support and resistance, I'm as good as gambling. And so support and resistance will be my number one. My second indicator will be my moving averages. I tend to use the smaller moving averages because I trade over a shorter period of time. So I use the 3-day and the 8-day. But the 5 and the 10 are equally as workable. The longer you want to be in a trade, then the higher up will be the time frame on which you'll be observing your moving averages. So for Bitcoin, for instance, if you just want to, Bitcoin has been trading lower, and I mean, I know it's moving up now, but if, okay, instead of trying to explain these things, this is the beauty of the charts. So this is Bitcoin actually. So when was that? Let's bring it back to current time. Here we are. There was a death cross. First we had Bitcoin, it crossed over 6th of March. So we had a golden cross on these two time intervals, and we see what happened after that. A beautiful upward trend. And then we have a red candle and so on, and up and down and up and down. But you know what? There's a cross here. There's a cross on the 22nd of March. There's a death cross. So at this point, you could decide to come out of Bitcoin and just wait and hold your money in some stable coin, and then just wait until you can get a golden cross and jump back into Bitcoin. And Bitcoin right now is trading at 54,600. It's not bad. It's coming back up, but you know, it's got a ways to go to 59. Actually, guys, resistance for Bitcoin right now, that is the highest point Bitcoin has ever gotten to, is we have that level there, and then we have another one. The wicks. See these wicks? The long part of the candlestick just shows that price action got to that high point but didn't close. By the time the day closed, it closed back at the, I'm gonna change my colors. By the time the day closed, it closed back at the pink line. And so we can read that the highest Bitcoin has ever got to is $61,754, and the highest close point is 61,189. So there is a prediction that once price action for Bitcoin can break above this zone, or this the high level 61,700, it's going to 70K for sure, and it's going to between $70,000 and $75,000. And you gotta wonder, how do people predict these things? Well, they predict it using the Fibonacci retracement tool. That is golden. Using the Fibonacci retracement tool is golden because it informs you on the next points at which price action for your coins, for your stocks, for your forex currency pairs. It tells you the next level it's going up to. And I'm not going to do that on this live stream. It's too much. So for this live stream, we just kept it at moving averages and how to identify a coin before it pumps. You identify a coin before it pumps by putting it on your watch list after a previous pump. So for Bitcoin, I would have this and I'd set my alert right here. I'd right click and I'd set my alert and set it up such that once Bitcoin crosses up above that particular level, notify me, click create. Of course it won't create because I don't have that subscription level here. And as soon as price action moves up, it could be 2 a.m. in the middle of the night, I'll hear a ring, ring, ring. And yeah, then I could, throw my cash back into Bitcoin again, assuming I had taken my cash out at this point. And even if you hadn't taken your cash out of Bitcoin at this point, then you want to always have, as a good trader, you always want to have some money in reserve, kind of sitting ready, sitting on the platform, waiting to put into whatever is moving next. Because when something is moving, you don't want to, at that point, begin to move your money from your account and move it from one platform to another, especially for coin pairs that trade in Bitcoin and not in your fiat currency or your stable coin. And so that's all we have time for today. I've been talking for 42 minutes. Let's hear from you. Let's hear from you. I would suggest, if you have been trading without using any indicators or few indicators, it's a good idea to begin to put some of these on your charts and begin to learn. A good way to learn is through demo trading. Open a demo account with your brokerage or with your crypto exchange. I trade stocks and I trade crypto, so sometimes I get those terminologies mixed up. So with your exchange, find out if they have a demo trading account, a paper trading account, so where they literally give you like Monopoly, play money to trade with, but you have the advantage of trading with live data. And that's what a demo account is. And that's where you want to always try your new strategies. So put on your moving averages, put on your support and resistance levels, and watch price action and see how they operate within the parameters of these indicators. Dave Smith says exit plan. Forgive me. Okay, what is my exit plan? So that's another video. I think it was 2 live streams ago. Actually, you know what, Dave Smith? I actually have a video that I released last week on when is a good time to enter into a trade. And I have so many videos I've made, sometimes I lose track. I have a live stream also where I've talked about, and I took it over 2 weeks, when is a good time to enter trade. And then I did the following week, when is a good time, when to find a good time to exit a trade. The death cross would be one of the parameters you could look at, assuming you entered a trade on whatever the time frame, the time interval you entered on is the one you want to. So if you entered into a trade on, say, a 15-minute time interval, then you want to pay attention to your 15-minute. You want to get in on a golden cross on the 15-minute, and when you see an impending death cross coming, like a cross back down, then you want to begin to pay attention. The other thing is you can see between these two intervals, you can see the gap between them is decreasing. So even before the actual cross back down, you can see that those two intervals are getting closer and closer together. And that's another thing that will inform you on it might be time to exit your trades. My favorite time frames for trading. So what are my favorite time frames for trading? That's from Every Minute. I love the name of your channel, Every Minute. To be honest, I use all the time frames. They all serve different purposes. So my daily time frame is what I'm going to start looking at the start of the trading day. So of course, when you trade stocks, you have the start of a trading day. But when you're trading cryptocurrency, you don't have the start of anything because it's trading 24 hours. So it's two different styles, but I mainly trade stocks. For now, anyway, I trade options as well. So there's always a start to a trading day. And so I'd look at my my higher up time frames. I'd look at my daily, and I look at my 4-hour. Those two are golden. One of the mentors I trained under a few years ago would always encourage us to look at the 4-hour time frame, because when trading stocks, you don't have the daily what you call them, candlestick only shows up at the beginning of a day and all the way to 4 p.m. And those times in between, you don't have a daily that has formulated for the next day. So you're looking at the 4-hour. And once the 4-hour is trading above our moving averages, then that's a good sign. So once the 4-hour is trading above, so for here, for instance, this is a daily. You can see on this green candle, price action closed above the 2 moving averages. Now that's a good sign. Now, I won't close this without talking about the 20-day moving average. Your 20-day moving average is almost like, for those of you who did science in high school, when you start science and you're using that litmus paper, that litmus indicator to determine whether your solution is acidic or alkaline. And if it's acidic, I think it turns blue. And if it's alkaline, I think it's red. That's long years ago. That's what your 20-day moving average is like. Your 20-day moving average. So if we take, to be honest, we can let's add another moving average. That 20-day moving average is like your litmus test. So if price action is above moving average exponential, yeah. So if price action is above it, then it's looking bullish. If price action should close below it, that's not a good sign for a 20-day. So your 20-day is like a major indicator. I'm trying to look for a color that'll show up nicely. Actually, I'll make it super thick. So you see this 20-day, this purple? That is like your litmus test. So if price action can break above it, then it's a go. Green light. But if you're trading and it breaks below it, like here, it broke, you want to be a bit hesitant. Granted, over the next few days, price action went up, but look what happened after that. Boom, 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 boom. So your purple, which is your 20-day, oh, no, sorry, my bad. I didn't change that to 20 days. So that has to change to 20 days. Okay, now we got it. This is it. Price action is above the 20-day here. And we see few instances where price action really dropped below the 20-day. Those were the times, I think that's when Bitcoin just plummeted all the way down to like 43K. Yes. So you can see price action was below all three moving averages. That's already an indication of a bearish market. So you don't want to be entering any long positions at that point. So each moving average has its significance. And then of course we have the high up moving averages. We have the 50-day, the 100-day, the 150-day moving average, you know, so they're all meaningful. I would say read up on them. Honorable says, in this chart, how can I use it and enter the trade? Well, we've been talking about that. So once I've uploaded the video, I would just suggest that you look over the video that I upload from this live stream, because I went into details on the details of how to use your moving averages to enter into your trades. So Dave Smith says, yes, 15 minutes for day trading and the 4 hourly. Again, like I said, I use all the moving averages. I will use the 4 hour and the daily to inform me of what price action is doing over the next 4 hours, right? And then I will use the 15 minute to, my 15 minute is like my, it's hard to say because I use them all. My 15 minute, once price action crosses above my 15 minutes, now you got to understand how price action even operates. It'll cross over the smaller time intervals before it crosses over the larger ones. So I will get a golden cross on my 1 minute time interval. And then if price action keeps on going up after 5 minutes, I'll get a golden cross on my 5 minute. And if you look on the 15 minute and the high up intervals, there won't be a cross yet. The moving averages will be converging, but they wouldn't have crossed over. And so you got to understand how, like the timing between the crosses. So it crosses on the 1 minute, is going up for the next few minutes. It crosses on the 5 minutes is a stronger indication that price action is still going up. It crosses on the 15 minutes. Oh, I might increase my position sizing, like, because this thing is planning to keep going up, hopefully over the 15-minute period. Excuse me. If it crosses on the 1 hour, I was trading, I think I was great. I traded GameStop. Okay, I'm not sure if you guys have heard of this maverick stock, GameStop. It went from $36 to like $300 in 1 day. And so a lot of retail investors like you and me, you know, we jumped on the bandwagon and we've completely confounded Wall Street traders who trade institutional money, like millions and billions of dollars. So GameStop has been going up and down and up and down. But Friday, I traded it. And once I saw a golden cross on the 15 minute, I increased my position. So I bought more stocks because that's more, is a stronger confirmation. Now, if there's a cross on a daily, that is awesome. If there's a cross on a daily, I will now keep on working down to make sure that there are crosses on all the time frames under lower than the daily, because that's like super confirmation. If there's a cross on the 1 minute, 5 minute, 15, 30 minute, all the way, we're talking bull, bull, bull. You want to put some money on those things. Whatever your securities are, I like to call them my babies. Put money on those babies. And I had a pretty nice trade with GameStop. It just zoomed all the way up. And somebody was asking about exit plan, David Smith. I had to know when to exit. I pretty much had, I don't know, I traded options. So it's just completely different. Different securities trade differently, but they all follow the same charting techniques. So once you learn these charting techniques, you can use it for crypto, stocks, forex, futures, whatever. And so that's what I teach. I consider myself a technical trader. I trade technicals. I love technicals. They help you predict the future. And with trading, we're only interested in two directions, guys, up or down. Up, put your money on it. Down, get your money out of it, make a profit. I've got 5 minutes left. I try to keep my live streams to 1 hour. Because I feel like, because it's Saturday morning, like everybody has something they're doing. You know, Saturday morning.